Hey everybody, Paul Kearney here of eXp Realty. And some of you saw yesterday that I had posted my monthly market watch video where I talk about the sales data each month that comes in for the Kingston Area Real Estate Association. I had also spoken yesterday about the key interest rate hike that we saw the Bank of Canada do. And as it turns out, I actually conveyed the wrong information. I said that it went up by a 0.5 percentage point, and that is false. It actually went up by 1/4 percentage point to the benchmark rate of 0.5%. So yes, this is the first rate hike that we've seen since the beginning of the pandemic. But it's important to me to convey the right information as well too. So with that being said, welcome to take number 2 of Market Watch, and thanks for tuning in. Let's talk about the interest rate hike that we just saw. The Bank of Canada announced just a few days ago that the interest rate's gone up, and we're starting to see this as being potentially part of a series of interest rate hikes that they're calling for. And it's partly to do with the fact that the economy's rebounding at a faster rate than they anticipated. And it's also in an effort to curb inflation that we're seeing right now too. So the bank saw that in the final quarter of 2021, the Canadian economy grew at a rate of 6.7%, which the bank cites as being very strong. In fact, the way that the economy has increased was stronger than the Bank of Canada's projections. I've been reading that they're anticipating as many as 5 rate hikes coming in the near-term future as the economy continues to rebound. We're starting to see Canadian banks reacting to this news, where Royal Bank has increased its prime lending rate to 2.7%, up from 2.45%. So what does this mean for you? Well, if you're looking at a $400,000 mortgage payment and the central bank decides to increase 5 times in the next foreseeable future, you'd be looking at going from a $1,500 a month payment to approximately an $1,800 a month payment, an increase of just over $300 a month. Another variable that's influencing inflation right now is the war that's happening in Ukraine. And as that continues and the price of energy continues to increase, we're going to see faster than originally anticipated inflation rates, which is again another reason why you're going to see a continuation of interest rates increasing. So let's now get into the sales data that we just got for the month of February. So on a year-to-date basis, since the beginning of January, we've had about 451 homes sell in the Kingston Area Real Estate Association. This is down 11.4% from where it was in 2021. So we're seeing that continuation of low inventory levels right now. The HPI composite benchmark price is $622,200, which is just over 30% from where it was in February 2021. When we zone in on the benchmark price for a single family home, we're seeing an increase of 30.9%, which represents a number of $626,800. The benchmark apartment price represents an increase to $405,700, showing a gain of 26.1% from where it was a year ago. The average sale price for February was $722,957. This represents a 26.1% increase from last year and is a record-setting number. The number of new listings saw a sharp decrease of 24.5% from where we were at a year ago. This marks an over 15% decrease in new listings when we look at the 5-year average and 30% when we look at the 10-year average. When we're looking at active listings, there were 193 for the month of February. This is down just over 30% from where we were at last year. The numbers get more staggering when we look at the 5-year average, where we're down 63.3%, and the 10-year average down even further at 81.1%. So overall, we're still seeing that continuation of an inventory shortage happening. I think it's also important to note that we will be seeing the interest rate continuing to rise as the economy rebounds, and hopefully we'll see more development happening and more measures being implemented to take care of the housing shortage that we see right now. So what does all this data mean? I believe this data means that the best time to buy a home is yesterday. However, I also think that the second best time to buy a home is now, because we're still seeing strong sales data. We're seeing forecasts that this is going to continue this year, and it's good to be able to get into a lower interest rate while they're still available. So if you're looking at buying, I think we have a good opportunity on our hands as we get into the spring market. If you want to talk about how the sales data affects your neighborhood, your house that you live in, or what you want to buy, by all means, give me a call and I'd be happy to help.